Welcome to Wyckoff Power Charting. My name is Bruce Fraser, and we are on episode number 15, which was recorded on November 7th of 2018 to be aired on November 9th of 2018. Today, our topic is how high can stocks rally? And I would like to introduce you to our co-host, Roman Bogomazov.
Hi,
Roman,
Bruce.
welcome.
Hi, Bruce. Happy to be here.
So let's get going. We have a lot to do today. So first of all, we would like to introduce you to Wyckoff Market Discussion, which is a Wednesday afternoon program that we do. And this is last bar analysis on the markets, great Wyckoff in-depth discussions of market conditions. We cover over the course of the weeks all of the important markets. And this is at 3 p.m. On Wednesday afternoons. This is Pacific time. They are all recorded, so attendees can listen to them at any time. So if you have never attended a Wyckoff market discussion and would like to, email us at wyckoffAssociates@gmail.com, and we will send you an invitation to attend one of our Wyckoff market discussions. Please go check out my blog at StockCharts.com, and you can go right through the blog link on the homepage and find it, and I'm grateful that you are having a look at it. And also we have lots of free content. So we have on the YouTube channel Wyckoff Education. So there's a number of great videos that you can watch on Wyckoff, and they're, I think, widely watched and favored among our Wyckofian people. So anyway, Wyckoff Education is additional content at wyckoffanalytics.com also, so check that out. So, Roman, we have a lot to do today. Let's get started.
Yes.
So we are going to start with a discussion of the structure of the market since January. So you can see this phenomenal rally, climactic move into the January peak, and that has been followed by a very sharp decline, change of character, automatic reaction is how we would label this. And this has set up literally a big trading range in the course of the year. And here we are in November, and we've been in this big dramatic trading range with a slightly upward tilt to it. But it's really informed how the market's been trading through the course of the year. And so now we've had an upthrust of the buying climax in January here in September, where the market stopped. There's trend channels on two levels, stopped there, turned down, and we all know what has happened in the month of October, which is a pretty sharp and nasty decline. And Roman, tell us what you think here.
Well, we walked through this decline last time on the last episode of Power Charting. And for those of you who are students of WMD class, you guys know that we went into so many details about this decline. And initially, we definitely seen a lot of selling behind it, associated with the prices going down. So we see how the supply is increasing. We see how the price is going down. So there is a synchronicity between the effort that pushes the price down and prices actually going down. And then we said that there are two types of the scenarios that we look at here. The first type, the first scenario is, could it be possibly be a distribution? The second scenario, could it be possibly be a reaccumulation? So now that the markets are rallying, and I thought that was a really great call, Bruce, last week that we did on the power charting, and 2 weeks in a row with WMD, about the possible rally. And we would be also asking ourselves question, why are we having a rally right here? Well, obviously we're encountering some support. There is some demand at around this support, but I think that our attention should be on the areas of absorption. And as an analog, we have this area of absorption in April, beginning of May, that led to such a prolonged rally that resolved itself in the upthrust action. So the biggest question here is, are we going through the absorption in the latest period, in the latest decline? And as you could see that the volume is increasing as the price goes down, but what's characteristically different about this second decline, second leg in this decline, is that the spread is diminishing. So the downward result is diminishing on the increased effort to push the price down, and that suggests the emergence of the demand. That suggests that demand is not only present, it's increasing and it's absorbing the supply. So
And you can, sorry, go ahead.
So we have the absorption on the way down. It's slightly different what we had here, and that's the difference. But if this is an absorption, then still our bias, at least short term, should be to the upside, and we're kind of, Bruce, following that bias.
Well, and I was just going to say that in late March, there's this characteristic decline, widespread, high volume, and there's evidence of absorption in that decline, as there is that you pointed out here. And so that is an aspect of the analog that's really helpful to us.
It's actually a very interesting idea, because we're looking at the absorption on the way down here, which happens here, and then it's spread out through the trading range. But the first leg is an analog to the original change of character right here. So,
very interesting. Well, having said that, is there something else that we can look at here to help us to understand the structure and how we might be able to work with the structure for trading purposes?
Bruce, last time we've talked about the possible distribution scenario, and now we're saying that this was kind of like a short-term distribution. The key here for us to look at is the how the price moves to the downside in the relationship of the support that was formed before in February and April. And we're seeing that we're trying to commit to the downside, but yet on the day of the touch of this support, we actually rallying back. And then on the next day, we're rallying again. So that tells us that there was no commitment to the downside. And that brings the question of whether this is a reaccumulation in just a much larger structure. And that's why currently, for us Wyckoffans, we should have, in my opinion, two scenarios that are going on. And then just to define the probabilities, Bruce, as to which scenario is more probable. And therefore, we are thinking about, could it be a possible phase C in the reaccumulation formation?
And this is a discussion for another day, but phase C within this entire period going back to January, phase C is the final testing area where the market comes back down and then prepares for a more important advance that takes it up and out of the accumulation, or in this case, reaccumulation area. So this is a substantially large preparation area for a further move up.
Well, Bruce, as you talk about the preparation, and we would be talking about, preparation as a cause building, why don't you walk us through the PNF counts that you have on the Dow, and let's see where it could potentially take us.
Happy to. And here, this is from the blog that I published just a couple days ago. And the idea here is that you can do your tremendous amount of Wyckoff analysis right on point and figure charting. And we can see the structure with great detail. Now, let me just point out, this is actually a point and figure chart, 3-box reversal, point and figure chart using 5-minute data. But in fact, you can see that this takes us back to the beginning of October. So even though it's 5-minute data, you're seeing a lot of market activity going back to the beginning of this important decline that we had from the highs to the lows. And here in this decline, you can see the elements of absorption occurring in the point and figure chart. So you can, first of all, just to point out, there's a downtrend line. This downtrend line is very well defined and contains the decline, any attempt to rally, going all the way into the end of October, which is the period that Roman just pointed out as being that important decline that was reversed immediately and turned up. But here's the structure that's going on. So you have preliminary support over here, and then a selling climax. Well, notice this, that there's a little redistribution point figure count here that you can take, and there's actually a number of them you can take through the course of the decline. But you can see that this count takes us right into the selling climax low. And then there's a dramatic response to that selling climax, which is a very large automatic rally. And this should tell us immediately that the market wants to go into some kind of a trading range. And this trading range is either going to be accumulation, a period of absorption, or redistribution. And so it's a little too early to know at that point, but we look for clues as we go further through the accumulation or the structure. And so again, a lot of volatility as you form an important low. So you can see a series of tests, and the tests have really no capacity to be able to continue into an important downtrend. Well, notice this is actually the phase C area, which is the spring in the test on this very small intraday structure. But this phase C decline immediately resolves itself by coming back into the trading range. It should be a huge clue to us as Wyckoffians that this is a market that doesn't want to go down anymore, that wants to attempt a rally. And so it climbs back up into the trading range, and then comes back down for one last test and touches support, and then has a really important, what we call a major sign of strength, which is a rally up and out of the accumulation area. So what we want to do is we want to count that with a point figure analysis. And so here we're counting from the test over to the selling climax. And this gives us two counts. You can see the math over here on the left, these two segments that we're counting. So you can go back and look at that and count these on your own. But we have a count that goes 25,960, 26,320, which is the first segment. And that also, notice that this is a prior peak that's in the middle of the chart. So an attempt to rally above that area probably is going to result in some kind of a pause. And so we get about a backing up action, shallow sideways type resting area for the market. And then that sets up a bigger count for a bigger move. And we can see that if we take these two segments on this, really what amounts to a conservative count, this count actually takes us up to and through the prior highs that were made by the Dow Industrials back in late September. So it takes us back to the highs. So that's very interesting. And there's a bigger count that we can take later on. Roman?
Mm-hmm. Yeah, I want to reiterate the point that Bruce has just made. When we go to the vertical bar analysis and we see elements of absorption, and we could make some kind of deductions as to what kind of rally we're going to have. Our assumption is that the rally that's going to take place might take us out of the trading range, or might take us above the previous high, the previous upthrust high. And we definitely want to go to the PNF counts and confirm that. So this latest count that Bruce has here, 27,280, 26,920, that goes above that high, and that just gives us that confirmation that the vertical analysis is in line with the PNF analysis.
And a discussion for another day, but notice this, that if we take from the backup and we go all the way to that early October decline, keep going to the left there, Roman, keep going. That's a count.
Yeah.
And so it might very well be, I wouldn't take that count until this market could prove itself by going to a new high and pausing there. But then we would want to look at this bigger count, which could generate a substantial move higher. So we want to take this one piece at a time. And right now we're into the zone of our segment one counts. We're just approaching that now. So far, this analysis is doing a great job for us. And we use this for swing trading purposes. That's how we, drill in and analyze these markets, is for swing trading. Last thought I'll leave you with, because we have a lot more to do, is notice this sign of strength in the middle of this accumulation area. it goes through the downtrend line temporarily and then fails back below it again and results in the spring and test. But then when it crowds back up, makes a higher low, and then it gets back above that downtrend line again. Look at the response as it finally breaks through that. And that column of X's is a very important rally where it just frees itself from this containment of the downtrend by that trend line. And so it's just a very dramatic advance and shows up really well on this point and figure analysis. So Roman, with that, let's move on.
All right. So in the next slide that we have is Dow Jones Transportation Average. And Bruce, we are constantly seeking confirmations for our analysis, whether it's vertical or PNF analysis. And what kind of confirmation transportation index could give us to the most recent market action, which is the short-term rally that we are in right now?
Well, the transports are important to us because they're very sensitive to the movement of goods through the economy. So when the economy is getting better, we should see the transportation averages acting well and reflecting this improving economy. Well, we've had maybe a conflict to that idea. Improving economy here, but we can see that the transportation averages in this recent decline in October actually has been a little weaker than the market. So again, we have this big trading range, climactic action in January, range-bound conditions with a buying climax and an automatic reaction. And so now we're in a slightly rising trend channel. And so the question that we would ask ourselves is this potentially reaccumulation on a large scale for an important move up? And often at the conclusion of a reaccumulation area, we will have one attempt to go back down as a major test, which is either going to go to maybe a slightly higher low or a slightly lower low. In this case, you can see we're labeling this a possible phase C, which is that final test, which in this case, I would describe this as a potential spring. And so the spring action, it goes down, takes out all the key prior lows in the trading range, and then the response to that spring is to rally sharply back up into the trading range. And so the idea here is to ask the question, was this a final test of the transports in this very long trading range where it is now ready and prepared to rally on a very important basis back up to the highs and higher? So Roman, what are your thoughts?
Well, let's start with identification of where big money actually had some kind of buying power and they've conducted some purchases. So on the way down in February, we're seeing some purchases there, then somewhere here on the way down as well, some of the up bars here, then here on the way down, then a bunch of buying in this area. And I'm just looking at the volume signature. For those of you who are not familiar with this analysis, come to our classes. We'll gladly explain what I'm doing here. And then as we see, there is some kind of value zone that where majority of those purchases have happened. And we had an oversold condition here in February that recovered really quick. Every time it comes to the value zone, there is a recovery. And look how oversold this is. And if we're thinking bearish thoughts here, we should be really concerned how quickly the recovery happens and how lively and active this rally is. It really does not require a testing at the low levels anymore. It had happened at the high level, the test, and then there is a quick continuation to the upside. So that tells us that whatever supply has been absorbed on the way down, there is such a deterioration of that supply, and now there is some demand behind it, even though diminishing demand, but still the price is capable of moving up on that type of the demand.
Well, if it moves up easily as it is now, and it's not taking a lot of volume to propel it higher in these early stages, that would be true evidence that the stocks have been absorbed. And it doesn't take much buying power to lift prices easily. I would also say this, just sort of a tip for people, is a clue that this is the completion of absorption, is that notice how back in February through May, notice how each one of these declines off the rally phase came back down pretty deeply. So the reactions, it was a classic early trading range. This also happened in June, late June. Well, this time, a true tell would be if once this rally phase ends, wherever this might be, and we may be somewhere near the completion of this rally phase, is that you don't get a big decline back down again. All you do is you get a sideways, kind of a pausing period, which we might describe as a backing up action. So a very shallow backup would be a really good clue that absorption has taken place, and there's just not a lot of stock available to be bought in the transportation average. It's all been accumulated by strong hands.
Well, Bruce, we're talking about the rally. We're talking about a possible reaccumulation scenario in the much larger structure. So the obvious question is, how do we trade it? Or rather, what kind of stocks, what kind of bullish ideas would we be trading in this type of environment?
Well, we're going to show you 3 different examples very briefly, and they kind of represent different setups, but they all have something in common. In this case, FEYE has a accumulation structure very large that goes all the way back to early 2016. You can see this just cascading decline on high volume that reverses into an automatic rally, sets up a trading range. So as soon as we get the selling climax and then the automatic rally, we draw support and resistance with the expectation that support and resistance is going to be very important to the stock for the foreseeable future, as it either builds an accumulation or potentially prepares for another decline. So in this case, we can see that there's attempts to go down and re-enter the support area and break that, and then it turns back up, but lower highs throughout. Well, notice this is a spring type action. And so the spring type action that occurs produces a change of character. And notice this, change of character is a series of higher lows as it rallies up into the resistance area. It's now acting differently than it did from the beginning of the accumulation area up into the spring. And so now we've had an attempt to go to resistance. Well, notice this in 2018 is that the attempt to go back down could only get halfway into the trading range area of this accumulation structure, and then turns back up, and now is doing something that it hasn't been able to do in a couple of years now, 3 years, which is to take out the resistance area of this accumulation area, which now proposes the idea that we have some kind of a jump out, maybe a pause, and then the beginning of a markup, a more important markup. Now, the point I would like to make here is that notice how this stock acted in the month of October when the markets, the indexes were cascading lower. Look at the lack of ability to be able to go back down. So now there's a real tip-off that there's relative strength at work here. The stock has been systematically accumulated over the course of this accumulation area and is ready to jump up and out of the accumulation and begin a more important markup period. Roman?
Really quick last thought here. Always think about the texture of the formation. Phase A has a stop in action and still some presence of the supply. Then we're going into phase B, C, and we're seeing how supply is diminishing, and then a change of character after the spring, and look at the latest formation, which is the trading range by itself, increase of the supply signature, and then the retest, look at the spreads right here, and look at the latest rally, which is so different than what we've seen before. All right, Bruce, what's next?
Really good. Well, Advanced Auto Parts. So here's a stock that has been, now it's a daily chart, so we're looking at a smaller time period than on FEYE. And so you can see this beautiful uptrend that's been in place now for a year. And notice that at the conclusion of the advance in September, late August, early September, you can see that there's a bit of a throwover of the trend channel, and then it goes into a consolidation period where it's under reaccumulation. And I love to trade stocks, especially in a big bullish uptrend for the market as a whole. I love to look for and trade reaccumulations. And this is one that appears to have the elements of completion. And notice what it's done in the month of October. Underneath, we have put the relative strength line of AAP to the S&P 500. And notice how throughout the month of October, Advanced Auto Parts continues to make higher highs and higher lows. And this is all taking place as it's pausing, reaccumulating itself and preparing for another move up. Potentially, it's not out of the accumulation area yet, but the relative strength has been quite good. Roman?
Just the fact that the price has such a low volatility and there are just singular bars where there is an attempt to shake out weak hands from the position and there is no result to that shows us a lot of elements of institutional non-selling, of institutions holding on to their supply and still not presenting that supply to the market.
Wonderful. So there's two examples. There's a big accumulation in FEYE, a reaccumulation in a big uptrend in Advanced Auto Parts. Ball Corp, container company, great industrial name, is in a gently rising accumulation or reaccumulation area going all the way back into 2015. And under this reaccumulation area, which has a slight upward tilt to it, we're making the case that Ball Corp has been going into stronger and stronger hands throughout this whole period. And now it's resolved itself up and out of the accumulation area, putting itself into a position where it can have an uptrend from here and the completion of reaccumulation. Roman, last thoughts?
Well, we definitely like what's happening in the last segment of this trading range. We're seeing very laborious attempts to go down with commitment to the downside and then the recoveries. And we're observing somewhat of a local spring here at the end of this move, which suggests that we're in phase C right here. And look at the rally that we have. Such a great rally on increasing demand signature, and the reaction here, the backing up action, is so shallow, it's quick, and we are already off to the races. So this is a really good long-term bullish type of sign and a possible reaccumulation.
And again, follows our theme about the month of October, where the market has been quite weak. And Ball Corp, look at the relative strength line in Ball Corp in this last rally up. It just completely ignored the dramas that were unfolding in the broader stock market. So on that, Roman, we are at the end of our program. And I thank you very much. And thank you all for watching. And we will see you next time.
Thank you, Bruce. Thank you all. Bye-bye.